I don't see that problem anymore from a marketing perspective for gold. I mean, nobody is going to be comparing Bitcoin to gold. Nobody is going to be talking about it as digital gold, as a safe store of value, as an inflation hedge. Everybody has pretty much come to the conclusion that it's a speculative asset. The problem is, what exactly are you speculating on? Because there's no value there. So if it's not digital gold, what is it? It's nothing.
Bitcoin is on track to end the year with a loss of about 65%. This would mark the third negative year for Bitcoin, with the other two being 2014 and 2018. In comparison, the S&P 500 has fared much better, but it is also down close to 20% in 2022. Although cryptocurrency prices have seen deep cuts this year, traders have continued to plow money into the space. 41% of people who responded to an online survey conducted by blockchain.com bought crypto this year, and 40% plan to purchase crypto in the next year. Hello and welcome to Money Talks. In today's video, Peter Schiff updates about the current state of crypto market following FTX collapse, the future of Bitcoin, and regulations.
Many of the most popular stocks are at 52-week lows, in fact, multi-year lows for many of these stocks today. But I think the bad news for the people still holding on to those stocks is it's a long way down. Even though they've fallen a long way, they still have a long way to go because they were up at such ridiculous levels. In fact, some of these companies are going to go to zero because they're going to go bankrupt. And, in the environment of rising rates and higher inflation, a lot of these companies that have no earnings are going to have a difficult time staying in business.
Caroline Ellison, the former chief executive officer of Alameda Research, said as part of her plea deal that she was aware FTX funds had been made available for the venture capital firm's investments.
Well, I don't think there were that many. I think to some degree, people that were frustrated gold bugs got into Bitcoin, because Bitcoin was performing, right? It was going up while gold was going sideways. But Bitcoin was marketed as digital gold. That was a whole selling point. Hey, gold is obsolete. Gold is irrelevant. You got Bitcoin. And I think that on the margins took away some demand from gold. I mean, maybe there were some institutions that would have bought gold, but because Bitcoin was there competing with it, they didn't buy gold. Maybe they didn't buy Bitcoin either, but they thought, well, why buy gold? Because, there's Bitcoin and, I don't know. I think that it certainly took away some of gold's thunder. A lot of the talk on the financial networks was about Bitcoin. It wasn't about gold. It was, Bitcoin, Bitcoin, Bitcoin. And so, but meanwhile, the smart money was buying gold the whole time that everybody was talking about Bitcoin. It was the dumb money that was being suckered in to Bitcoin. But I think that now that the Bitcoin bubble has popped, and over the next several years, the air is going to be coming out, I don't see that problem anymore from a marketing perspective for gold. I mean, nobody is going to be comparing Bitcoin to gold. Nobody is going to be talking about it as digital gold, as a safe store of value, as an inflation hedge. Everybody has pretty much come to the conclusion that it's a speculative asset. The problem is, what exactly are you speculating on? Because there's no value there. So if it's not digital gold, what is it? It's nothing.
In a transcript of proceedings for her plea deal in the Southern District of New York released on December 23rd, Ellison acknowledged the financial ties between FTX and Alameda at the center of prosecutors' case against former FTX CEO Sam Bankman-Fried. According to the former Alameda CEO, Alameda had access to a borrowing facility through FTX from 2019 to 2022. I understood that FTX executives had implemented special settings on Alameda's FTX.com account that permitted Alameda to maintain negative balances in various fiat currencies and cryptocurrencies, said Ellison. In practical terms, this arrangement permitted Alameda access to an unlimited line of credit without being required to post collateral, without having to pay interest on negative balances, and without being subject to margin calls or FTX.com's liquidation protocols. She added, if Alameda's FTX accounts had significant negative balances in a particular currency, it meant that Alameda was borrowing funds that FTX's customers had deposited onto the exchange.
No, it's popped, but there's still a lot of air that's going to come out. Look, These tokens are worthless. There's no value. Even when Bitcoin is down 95%, 99%, I still wouldn't buy it, because when it loses that last 1%, that's 100% from where I would have bought it. And I don't want to throw away my money.
Fair enough.
Data from Cointelegraph and TradingView showed Bitcoin briefly decoupling from solid sideways action to dip to $16,750 on Bitstamp. The impact of the November U.S. Personal Consumption Expenditures Price Index print was notably muted, despite the data forming a key component of Federal Reserve policy. Even in the low-income, low-volatility environment that Bitcoin continues to trade in, PCE barely moved markets as traders began to accept that Christmas 2022 may be an underwhelming one.
Well, we don't need more regulations, that's for sure. Regulations are not the answer. I mean, FTX would have happened even without regulators. In fact, this scam might still be going on if FTX were regulated. Bernie Madoff pulled off his Ponzi scheme for a lot longer than FTX, and a lot more money, I think, was involved. But the reason it went on for so long is because he operated under the cover of the regulators. He had the SEC, he had the NASD, now FINRA. But if you go back to the original Ponzi scheme, right, his scheme didn't even last a year. There were no regulators there, so the market quickly put an end to Ponzi before too many people lost too much money. But because of the regulators, the current Ponzi, promoters, they actually end up stealing a lot more money. So I don't think we need more regulation. We actually need less regulation. We didn't even have the SEC until 1932. The New York Stock Exchange started in 1792. So we had 140 years of no SEC. I think we had a much better market, more efficient. I think there was less fraud back then than there is now. But so as far as these comments on Bitcoin, look, more regulation is going to hurt the industry. It's not going to help the industry, because the whole selling point of crypto was its lack of regulation. That was like why it existed. No, that was the thought process. You see, if you think of Bitcoin as like a pyramid scheme, and a couple of years ago, a lot of these retail investors had got in, and now they needed more buyers. And they were trying to entice the institutions to come in because they had the big firepower. And so in order to make it, marketable to the institutions, that's when they started talking about, we need regulation. But I think now, given that there was a big collapse, because the whole institutional interest was all the FOMO. Like, hey, look at this thing. It's the best performing asset. You got to get in on it. If you don't get in, you're going to miss out. How are you going to explain to your investors that you missed this greatest investment opportunity? So I don't think the institutional demand is going to be there anyway. So I don't think no matter how much regulation you get, the institutions aren't going to want in, but the individuals are going to want out. I mean, you're going to destroy whatever the use case was initially. And I don't think Bitcoin in itself is big enough to start a financial crisis. I mean, yes, a lot of people are going to lose money in crypto. All the money that was made in crypto is the money that's going to be lost. It was a zero-sum game. And by the way, if you made money in crypto, don't necessarily count your chickens yet, because you're going to get sued. A lot of people that made money in crypto are going to get sued by the people who lost money in crypto. So at the end of the day, it may be the lawyers that end up with all the money, which unfortunately is normally the case. But to the extent that anybody loaned money against crypto assets, yeah, they're going to lose, because those loans are going to go into default and the collateral is not going to have any value. But crypto is kind of like the tip of a much bigger iceberg, right? So when crypto crashes because of leverage and speculation, then a lot of other companies are going to collapse. It's not crypto in isolation. It's just the weakest link in a very weak chain.
However, a sustained recovery in risk assets may happen only after inflation shows signs of cooling. That would raise expectations of a pivot by the United States Federal Reserve from its aggressive monetary tightening to an expansionary policy. In the short term, markets may remain volatile as volumes are likely to remain thin during the holiday season.
There's this conspiracy theory out there that you're just trying to push down the price of Bitcoin with all this FUD, and so you're buying it at the bottom yourself. Can you settle this once and for all for us?
Well, first of all, we're nowhere near the bottom.
Okay.
And I have no intention to buy Bitcoin, nor do I have any influence on Bitcoin, because the whole time Bitcoin was going up, I was saying the same thing. It didn't stop it from going up. So no one cares. In fact, there's actually programs out there that people wrote, like whenever I tweet about Bitcoin, they automatically buy Bitcoin on these programs. Like it's like you buy the Schiff, and they launched these programs when Bitcoin was around 60,000. And so,
did they make money?
It was a very good. Of course not. Everybody, you should short Bitcoin every time I talk about it. You'd have made a ton of money. But the more I talk negative about Bitcoin, the more everybody wants to buy it. So it's not my fault that it's coming down.
So, what do you think about Peter Schiff's opinion about Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.